लेकिन जो कार्यकर्ताओं ने रात दिन मेहनत की, ये उन कार्यकर्ताओं की जीत है।
I haven't lost. As I said, I haven't lost.
चुनाव के नतीजों की जिम्मेवारी भी पूरी की पूरी मेरी है।
Well, that's the biggest news of the day. A historic win for the Aam Aadmi Party. 67 out of 70 seats in the state of Delhi. Never heard before, practically in any state in India. That dominated headlines, that dominated mind space. For the markets, of course, today was a zigzag kind of day. If you were a trader, you were whipsawed on both sides. The markets trying to put a bottom at a little below 8,500 and succeeding, but only for the moment. Hi.
Hi, Lata. Absolutely. But at least to look at the glass half full, we managed to snap that 7-day losing streak that we saw for the Nifty all these days. Any which way, these are our top stories this evening. The Aam Aadmi Party wins 67 of 70 seats with a massive 61% of the vote share. It's the biggest ever win by any party in Delhi to date. Kejriwal will be sworn in as the Delhi Chief Minister on the 14th of Feb.
Markets end a volatile session in the green, snapping a 7-day losing streak. The Nifty saw an intraday swing of more than 150 points before closing with a 40-point gain. The Bank Nifty ended close to 2% higher and the IT index closed with a loss of 0.7%.
In stock-specific action, then IT stocks were weak as NASSCOM said it expects FY15 growth at 13%, which is at the lower end of the range of 13 to 15% for FY15 and 12 to 14% growth estimated for FY16. DLF recovered intraday despite a weak Q3 showing, while Hindalco ended higher, reacting to Novelis's quarterly numbers. From the broader markets, Motherson Sumi and ABB ended higher, reacting to their quarterly figures.
Well, those were some of the headlines from the markets, and here are the experts that we have lined up on the show for you today. Arvind Sanger of Geosphere Capital will give us his expectations from the budget. Andrew Holland and Sanjeev Prasad will give us their outlook for the markets in the near term and the medium term, and we'll also tell you how India Inc. is reading the results of the Delhi elections.
Well, first up, let's get talking on the markets then. Remember that the markets snapped the 7-day losing streak that we saw, and it seems as though at least the markets gave a thumbs up to the AAP victory in Delhi, at least going by what today's reaction was. Rima joins in to give us a wrap on the day's trade. Rima.
Well, it looks like that some of the market nervousness around the AAP victory is already priced in after 7 consecutive days of losses. Because if you see the stocks which are linked to AAP, something like a Reliance Infra or a Tata Power, which could be negatively impacted if, AAP, is true to all the claims that it wants to make. Those stocks actually did well today, and they moved, closed up in the green. Something like a Tata Power was higher by close to about 1.5%. But other than that, the strength came in from, rate-sensitive names. So Bank Nifty as well as the Auto Index was up close to about 1.7%. In particular, in the Bank Nifty, it was the heavyweight ICICI Bank which stood tall with a rally of close to about 3.5%. In the auto space, it was Tata Motors which saw a gain of more than 4%. Both M&M and Ashok Leyland also closing up quite smartly. Cement stocks across the board, so in ACC, Grass seem higher in trade. Maybe it's to do with the GDP figure, we're not sure, but cement was a pocket of strength today. Tata Steel reacted well to Novelis's Q3 profits, which rose 250% to $46 million. So Tata Steel did well. Other gainers included Cesa Stellite as well as Power Grid. On the losing side, IT was trading subdued. So HCL Technology, TCS, Tech Mahindra, more or less down closer to anywhere between 2 to 3%. Infosys performance was fairly resilient in comparison. Other losers included Sun Pharma as well as Reliance Industries. And earnings reaction, it was DLF in the frontline space which got smacked due to poor earnings. But on the other hand, in the mid-cap space, JK Tyre was racing fast on the back of a strong operational performance. Back to you.
Well, that point is taken, Riva. There were a lot of individual stocks which have done exceptionally well on the basis of their quarterly performance. But today what stood out was actually the whipsawing in the market. We saw that particularly in the bank nifty and in a stock like ICICI, even the big boy SBI. In ICICI, we've seen several days of actually a sell-off in the stock. Actually, if you pull up the 1 week of that stock, you will see, or even 2 weeks, you will see the kind of sell-off we have seen. What happened in ICICI Bank were two things which led to that sell-off. One, the NPLs in ICICI's third quarter earnings were a shock. More importantly, when HDFC Bank could not be purchased all through last year because of the FIPB rules and the fact that the stock had gone over 74% in terms of foreign holding, a lot of the foreign interest migrated to ICICI and Axis Bank. Now with the QIP and the ADR issue of HDFC Bank opening up that space, we saw the huge sell-off. That is, people trimming their positions in ICICI Bank because they got allotment in HDFC Bank. That led to a huge amount of short positions, and today there was this big short covering rally that we saw as soon as the markets opened, and thereafter we continued to see those long only funds selling off in ICICI Bank. It was actually ditto for a large number of banks. There was a short covering in anticipation early trade that the sell-off is over and all the bad news is in the price, but at higher levels we continue to see in the bank stocks, notably in ICICI and SBI, continuation of some people trimming their positions. So the zigzag in the Nifty was mirrored in the bank Nifty and mirrored in these two big stocks, ICICI and SBI. In particular, the other big factor that the market had to contend with was the NASSCOM reducing its guidance, and therefore the big losers in trade today were the IT stocks.
Okay, well, that's on the markets, but the big story politically was that it's almost a clean sweep and perhaps the biggest victory ever in state elections. The AAP avalanche has buried the BJP in Delhi. Arvind Kejriwal and his party has won the highest ever tally in Delhi's history, 67 out of a possible 70 seats. The BJP was in fact reduced to just 3 seats, and what's worse, even its chief ministerial candidate, Kiran Bedi, has bit the dust from Krishnanagar, a place where no BJP candidate has lost in the last 22 years. For the Congress, the picture can't be gloomier. The party has in fact scored a duck for the first time, as it could not win a single seat. Arvind Kejriwal will take oath on the 14th of February, that's on Saturday. Speaking to supporters, a victorious Kejriwal thanked them and said the massive mandate is scary, but he also assured that the party will live up to its promises.
Very scary. जितना बड़ा बहुमत दिल्ली की जनता ने हमें दिया है, मैं एक ही निवेदन करना चाहूंगा सभी कार्यकर्ताओं से, सभी हमारे एमएलए से, पूरी पार्टी से, जरा सा भी अहंकार मत करना.
AAP ran a very positive campaign. They only spoke about what they can do for Delhi. They never indulged in negative campaign. I think that is the best USP. And also people thought Arvind is a common man, unlike the other parties, where they made a too negative campaign, personal attacks, that people are not gone well with the people.
Well, for the markets, of course, the BJP not getting even the status of an opposition party in Delhi is a matter of surprise. The party has not even won the mandatory 7 seats that are needed to become an opposition party. A minimum of 10% of the seats are needed to be won. They haven't won that. But what is India Inc. made out of the Aam Aadmi Party's victory? Let's hear it out from one of the biggest of India Inc., Deepak Parekh.
I think what has impacted the Delhi elections is the last 7-8 months, nothing changed in Delhi when it was under the Lieutenant Governor's rule. And that may have upset the people. And he's promising cheaper power, access to water. Now we'll have to see how the AAP government is able to deliver those promises.
All right, time now for some market perspective. Arvind Sanger, managing partner at Geosphere Capital Management, says the markets expect to see a clear direction on the government subsidy policy in the budget, but the near-term catalysts still remain higher oil prices and weak earnings.
The budgets are really, in my opinion, not as important as some of the, it's more a statement of intent of how the government sees the world. So I'm not paying specific attention to what are they going to do to specific tax breaks, what are they going to do to encourage, different investments. But the question is, and I think RBI and others have commented on this, what is the quality of the fiscal deficit reduction? Is it counting on, again, unnecessary spending curbs, or is the government going to be willing to continue to invest and control subsidies? And if that's, clearly that's where I'm looking for direction from the budget. You've had a couple of headwinds for the market lately. One is clearly, oil prices have rebounded a little bit. Secondly, you've had this ARP thing developing in slow motion over the last few weeks. So it wasn't just the exit poll results, but even before that, the signs were disquieting. So I think there was some selling on that. The earnings have been very disappointing. The banks particularly have disappointed with the NPA issue not seeming to be having peaked yet. So that's been a negative surprise.
All right. So a growing feeling that perhaps the markets have peaked for the moment. But let's get back to action for the day. All the action from the futures and options space from Nigel D'Souza.
Well, volumes were on the higher side in today's trading session. So around 3.5 lakh crores what we did in total volumes in today's trade itself. A couple of call options should come up to you on your screen. The 8,900 call as well as the 8,800 call. Both of them are fairly active, but the premium didn't move much. That's in spite of the fact that the Nifty moved close to around 40 points out. Now that's some distance away from current levels, but there is writing at both those two strikes. Traders looking to eat into that premium of around 35 to around 55 rupees. The 8,600 call though, that's the most crucial because that as well was getting written. The premium moved from around 125 rupees to around 132 rupees. That's telling you that traders see that 8,700 to around 8,738 as a firm resistance for the Nifty in the near term. The 8,500 foot though, that's extremely vital because today as well the premium over there fell from around 116 bucks to around 77 rupees. And we're making that point yesterday as well that the bulls will look to defend that 8,500 odd level. Remember, if you're riding that particular strike, the stop loss comes closer towards that 8,400 level. The 8,400 foot as well in today's trade, that one was getting written. The premium over there fell from around 82 to around 52 rupees. What's that telling you is that after a 500 point cut, the bulls are looking to protect that level of around 8,400 to around 8,500. Now the Nifty ended higher. That's because a couple of stocks came in for a short squeeze. So SBI did see a short covering bounce in trade today. ICICI Bank as well did move higher, but take a look at it. No much open interest build up is what we saw. Tata Motors as well, midway through the trading session, that one as well did come in for a short covering bounce, while IGL, otherwise not very active, that one was getting sold into in today's trade itself. HDIL though continues to see buying interest. The stock ended higher, and in fact open interest as well swelled up on that counter.
Okay, Nigel, thanks very much for that. Focusing on the IT space then. NASSCOM has released its guidance for FY16 and the expected performance numbers for FY15 today. For FY15, in fact, the IT sector is expected to grow at the lower end of NASSCOM's 13 to 15% expected guidance, with an expected growth of 13.1% in constant currency terms and 12.3% in dollar terms. The revenue, the rupee terms, the growth would be 13.9%. For FY16, the guidance is flat. For FY16, NASSCOM expects IT services revenue to grow by 12 to 14%. Kritika Saxena caught up with the chairman and vice chairman of NASSCOM and began by asking them why the growth curve seemed to get downwards at the latter half of the current fiscal.
Europe has been a little challenged, and even some of the emerging economies have not done as well as we thought it would be. So because of this fluctuation in terms of macroeconomic outlook, there has been some aberrations in terms of the growth opportunities that the industry saw. But overall, if you really look at it, we came right as per our guidelines of 13 to 15%, and the future also we are guiding to 12 to 14%, which is again healthy given our base. So overall, we are very happy with the industry the performance, our ability to contribute to the economy, our ability to generate employment for people. So overall, a very great story that we all should be very proud about.
Okay, coming to the 12 to 14% guidance for FY16, my question to you, Mr. Reddy. Gone are the days where we used to talk about 15, 16, 17% growth. Is that because of consolidation being seen in the traditional IT services? If yes, the newer services, the innovative digital services, which are expected to significantly push revenues, by when will they show up in terms of numbers?
Sure. One of the things that you all have to realize that these percentages can be interpreted the way in which you like. Now you're saying, the past was 15, now it's 12, etc. But look at the absolute number that we are adding at this point of time. I think that number is increasing year on year. It might be 12%, but at a 12% at a higher base, as opposed to 15% on a much lower base. So the result is, I don't think this story has gone anywhere out at this point of time. They continue to be very bullish about what's happening to our industry at this point. And I always said that, look, there is sizable amount of disruption that's happening in this industry. The service offerings can change, but the whole mix of things. But finally, the end customer has to use some services somewhere. But that using of those services are definitely coming back to India.
Okay, time for a break now, but coming up on the other side, more market opinion as well, and we'll get you a quick wrap of all the earnings action as well.